I see you there. I see you on YouTube following us, and I love you. You know I love you. Don is here producing the show. Trader Mo is here. Your man Paul is here. And who just said that, Paul, in the comments, that the super squeeze is no tighter than those baby white shorts you're wearing today, squeezing those butt cheeks of yours and that crotch of yours.
What are you talking about?
Your shorts are just taking over the internet. How are you guys doing? Welcome to the Everything Money Show. It's pandemonium. Paul, I've been on this all morning, somewhat just in disarray. I can't make sense of what's going on.
The market's up 2%.
That's good for you. No, it's not.
No, it's not.
Sorry, bad. It's good for everyone else but Paul. We see you all there. We welcome you into the Everything Money live stream. It's Thursday. It's craziness. It's craziness. Paul's pulling up stuff on the whiteboard. Paul, let's get to it. No one cares about me. What are your thoughts about the craziness that's going on today with everything? What's going on?
Well, I've said this to many people. I think I've said it to you guys. We're going to talk about this for decades to come. This whole last year, and starting with the pandemic, and a 40% drop, the fastest 40% drop in history, and then an 80% rebound, or even more. About 80% rebound. And then this GameStop. The funny part is, I'm wondering how much of this really, everybody's giving these Reddit users a lot of credit for it. I think it's just a short squeeze.
And it's interesting because there's only 250,000 people on that Reddit channel or something, or there was when this started.
Oh, I'm sure it's way higher.
That's what
now.
I was saying.
Well,
how are they buying out? I mean, so what was it, Paul? The GameStop was shorted somewhere in the efforts of 70 million shares when there only are 65 million shares.
I think it's 50. It's like 140% of their shares were shorted at one point.
So I thought this the same. How is this group of Reddit users somehow shifting the market this much? Now, what I would say is it's confession time. I came to Paul weeks ago. We have fans who watch us and are patrons who also have channels, and they're pushing the Weebles and the Robinhoods. And Paul said, damn it, we're not doing what everyone else does.
Who was trying to force me in this group to do it?
Well, again,
who was trying to push me? And I said,
I'm
sticking to my fundamentals.
I'm glad I have you in my life because listen, I tell Paul we shouldn't be using the words all and every. Every other channel keeps telling you to click Weeble and Robinhood below. And this morning, they locked all of you out. If you bought GameStop at $465 this morning, and it's now down to who the hell knows, class action lawsuits are being discussed against Robinhood, and it's right in the fine print agreement that they can do this. But Robinhood and Weeble screwed you. Meanwhile, we were pushing Charles Schwab the whole time. It's not I told you so. It's just I am now thanking Paul because he was right. Your thoughts on that, Paul?
Well, Mo wants to say something.
You made my favorite point this morning. You said Robinhood is for the people and for the small. Of course, they claim they are, and they're for the small guy and this and that. They're not. They're against regulation and everything. And
they
now
literally started with the premise of we're equalizing the playing field for the small guy.
And when it comes down to it,
they didn't care.
There's your regulation and red tape.
They didn't care. And regulation and red tape are always a bad thing. They want to do more regulation now. You know, people are talking about how this is sticking it to billionaires. Guys, let me give you a little bit of my opinion.
Well, yeah, that's true, Paul. I've been reading news articles all day and looking at YouTube videos, and people are saying that this is a revolt of the poor. We've done it now. We're taking over.
Not.
Occupy 2021, I've heard today.
Is that what you heard?
This is a revolt of the poor against the rich. We've had enough, and it's time to come after people like yourself, and I want to hear your thoughts on it.
First off, I'm not a billionaire yet. But when I am a billionaire and if I have a fund, I might lose money. I'll be fine. When you guys buy these stocks at 450 and it goes to zero or goes to some astronomically low number, you're not going to be fine. This does not hurt the rich. This only hurts the middle class and poor people who are on these apps, who are undisciplined, who are playing it like a video game. That's all that's happening here. That's why we're teaching what we teach. That's why we talk the way we talk. If you want to be rich, Warren Buffett was worth $5,000. Which back then dollars was about $30,000 or $40,000, $50,000 back in 1955, 1960. And now he's the richest, second richest, third richest man in the world. You can become very, very wealthy being disciplined. You're more likely to become very, very wealthy by being disciplined. That's all we're trying to do here. It's fun, exciting. I love watching the GameStop and all these other stocks go up and down, up and down.
It's funny. I'm looking over your shoulder. It's down 105%. It was up down
$105.
$105, 30%. This is wild.
Well, it started up. It started this morning pre-market up like 80%. Then it went down a ton. Guys, this isn't about rich versus poor. And if you think it's about the rich getting hurt, you are absolutely delusional.
I think, Paul, that is, I guess it might be your opinion, because some people are saying that if it wasn't hurting the rich, why are they stopping this? Why would they halt everything? Why are they halting Robinhood,
who's
Fidelity?
The rich stopping this? It's not being stopped because of that reason. It's being stopped because they're overloading the systems.
That's what it is.
They're stopping because they're overloading the system.
They're trying to
Are you certain of this? Because that's not what everyone's saying.
Well, who's saying? By the way, who's saying it? Reddit
I'm
users?
sorry. Maybe so. The founders of Robinhood have come out and said that they are stopping this.
Yes,
it's not
but why?
the system. It is not the system.
No, the system's not stopping it. They're stopping it because they don't want the system to overload and go crazy.
Now, Seth, the majority of these people trading this are on this Robinhood and Webull and whatnot. But I have a TD Ameritrade account, I have a Merrill account, I have an E-Trade account, and I have a Schwab account. It took me 20 minutes to trade my one option call, my covered calls on Apple this morning, which usually takes me less than 5 minutes. This thing took me 20 minutes to do because all the systems are overloaded. Merrill I couldn't even get on. E-Trade I couldn't even get on.
I hope it's Robinhood on purpose just stopping it, not because of the system. That would prove my point even more.
They're spinning it saying that they're stopping it because they want to protect the hedge fund guys because they're getting screwed and this and that. That's why they're saying. I don't think it's that.
By the way, that's proof.
Completely overloaded.
That's proof that Robinhood and Webull don't care about you. That's proof right there. They don't care about you. They just don't care about you.
Well, that I think a lot of people are in agreement of.
Well, but the whole point is, 3 months ago it wasn't the case. 3 months ago it was they're here to equalize the market, make the average guy get in, et cetera, et cetera, et cetera. When that's not the case at all.
Other people are saying that they were actually they restricted selling. I'm sorry, they restricted buying, not selling. Other people are saying, Paul, that you're perhaps incorrect.
I'm also wondering.
Maybe I am.
I'm also wondering when they restricted buying, were they just saying that you can't buy anymore? Or I don't know if this information is out there. You can't buy anymore, or are there no more shares to buy? Is the shares outstanding just zero?
Oh, that I have not.
Because
heard,
I went in and tried to short GameStop the other day. I was going to short one share of GameStop, and I couldn't do it because all shares were shorted. So is this the same thing going in the other direction?
And by the way, you're also assuming what's GameStop? What's Webull and Robinhood's official statement? What are they officially saying? I don't want to hear what people are speculating. What's the official statement? Does anybody have an official statement I can read? Does anybody have that?
I do not, no. I mean, we can go to Robinhood.com.
They're currently only letting you sell on Robinhood.
Now, can I go in and buy Apple right now if I want to on Robinhood?
I've heard the answer is yes.
Okay, so maybe there's no shares left to buy. Maybe we're jumping to conclusions here.
Well, we do have a jump to conclusion mat right underneath Paul. We haven't even shown it yet, but it's been there all along. Well, anyway, while you guys look that up, it's a frenzied day here. We appreciate your support. As always, we encourage you to tickle the thumbs up so that more people can jump on. I guess the premise of the show, folks, is that I'm a normal guy kind of like a lot of our viewers.
Wait a second, time out.
Go ahead, Paul.
Guys, they're not even talking about the billionaires.
Go on.
They're not even talking about the billionaires at all. They're talking about raising requirements, leverage, margin requirements, things like that. Interactive brokers they're totally even stopping the trading on these things. This has nothing to do with billionaires, guys. That's what somebody said. They're doing it to save the billionaires. Where is that being listed? There's no way a company would ever say that.
This is definitely what they're talking about. I've been.
Oh no, I'm sorry.
This is a big thing.
Robinhood is saying that.
No. That's my point. I understand, but
I don't care what the average person thinks.
I understand. That's what the public. Everyone's going
By the
crazy
way,
about this.
If you think that they're stopping it for the billionaires, either way, it proves that Robinhood doesn't care about anybody. They only care about making the money, and they're not doing what they said they would. And when I was preaching against Robinhood and Webull, saying they're making a video game, I hope to God it comes out that you guys are right, that it's about saving the billionaires. That would make me even more satisfied. They're trying to sit there and limit all the, by the way, every brokerage, the reason I'm not looking at that is, every brokerage is doing the same thing. I just got a notification from Merrill yesterday that says if you want to trade GME, you have to put 100% margin up. That's all they're saying here. Because Robinhood and Webull were bragging about having very low margin requirements, right?
I want to read a tweet, and I want you to guess who it is. I want you to guess.
Okay.
It took less than a day for big tech, big government, and the corporate media to spring into action. Hold on a second, Paul. That's a great guess. Corporate media to spring into action and begin colluding to protect their hedge fund buddies on Wall Street. This is a rigged system. Who said that?
Bernie or AOC?
It's Donald Trump Jr.
What a loser!
So you couldn't be more wrong, Paul.
No, by the way,
I'm sorry. What I mean is, isn't that hilarious?
It's absolutely ridiculous.
So it seems like people from both sides are now agreeing on this. So what does all this mean, Paul? I guess
what it means is there's going to be more regulation coming. That's exactly what it means, good or bad, or however they see it. Good or Robinhood tweeted this out. This is from Matt Jensen. In light of the current market volatility, we are restricting transactions for certain securities to position closing only, including AMC and GME, and then you read the statement below.
But why are they doing that?
I don't know. It's in the statement that you have pulled up.
I know, but why would they do that? Think about why they would do that. Let's think about fundamentally why they would do that.
Go on.
Wasn't one of the big attractive things was margin on Webull and Robinhood?
Yeah.
You make more money by borrowing money. When they see this kind of volatility, and this volatility can jumps up so much up and down. If you're buying on half margin and the stock can go down half price in one day, you're wiping your entire account out. So they don't want to take that risk on, right? Mm-hmm. That's the whole point of it. To be honest with you guys, they shouldn't do it for smaller guys because there's less likelihood they're going to get their money from them. They should do it for the. Go ahead.
Phoenix is saying that they did this to protect their young, inexperienced investors from buying $5 stocks for $400.
I love you, Phoenix. It's a good spin. They did it to protect their butts.
Where were they?
They did it to protect their butts, Phoenix. It has nothing to do with anybody. It's to protect Robinhood.
Where were they 5 months ago?
Exactly.
When the kids that were 18 years old are going into $1 million of debt and killing themselves. Where were they then?
Don't say it's a good spin. And if I were Robinhood, I'd be saying the exact same thing. But it is not what's happening. Guys, look at what they do, not what they say. What are they doing? They're limiting retail investors. Why are they doing that? Why would they have done it now, but not all of a sudden months ago? It's because there's a risk to Robinhood themselves. I'm okay with that. But let's not make a delusion that it's pro-Wall Street and anti-retail investors. Now, in fairness, would I rather give margin to a Wall Street hedge fund or an 18-year-old kid who has $1,000 in an account and can borrow and $5,000 to buy? Of course, I'd rather give leverage to the hedge fund. If that's pro-hedge fund, that's called pro-business and being smart about business. I would rather lend money to a hedge fund that has billions in assets than to an average person that can all of a sudden their margin account can go into the negative very quickly, and there's very little likelihood of getting their money. Do you follow what I'm saying there?
Yes.
Let me bring this home a little bit, folks. Let's just calm down here and take a breath. I love you. You know I love you. In the meanwhile, our subscriber count's going great. We love our new subscribers. Our Patreon is growing like just amazingly, and we love you. I was going to say that...
Can I make a comment?
Hold on a second, Paul.
No, this is important.
Please do.
Grant Williams made a very, very great point. Can you please put up Grant's comment?
Grant said if they get bailed out when they lose money, Why can't we?
I agree 1,000%. This is why I'm against all bailouts.
That's true, Paul.
Why are we bailing out I love billionaires.
You do.
I believe billionaires should be allowed to make as many billions as possible, but they have to be held accountable to their decisions. We can't bail them out just because they make mistakes. Because I don't believe in bailing out the average guy when they make mistakes. So why would we bail out even if it saves 100,000 jobs? I don't care. We become better as a country when everybody learns their lessons and has the best lessons I learned. I look back at all the mistakes I made in life and go, thank God I made them. I told my buddies last night in a conference call, I learned because of losing money or being embarrassed. And it's usually both at the same time. We cannot bail people out. But if you guys think that Robinhood is not acting like every other market maker, every other brokerage out there, you are absolutely delusional. They care about becoming wealthy. They don't care about retail guys. They care about the hedge funds. And I'm sitting there, and I do agree with that part of it. They care about that, but at the end of the day, what I was looking at yesterday was I thought to myself, okay, the volatility here, you can't even get in and out of the stock. Like you said, you couldn't even get out of it. You couldn't even short a position.
Couldn't even short it.
So to them, it's easier to say, we're going to restrict it rather than say, you can't do it. It just gives you an error every single time. If you're a company, which would you rather do? This is overloading systems. He couldn't log in today. I couldn't log in yesterday for a bit of time. I couldn't refresh and get updated numbers. It's overloading systems,
and
guys.
it's frustrating because I'm in there trading normal things, and I don't care about all this GME and AMC and this and that. I'm just trying to do my job, and I can't do it because of all of this overloading.
Yeah. Well, what I was trying to say, folks, is I couldn't believe it while I was hearing it right in front of my face. Paul telling me this, the discipline. This is tortoise versus hare. I've gotten in on all of the stuff. I got in on the Tesla. I got in on the Amazon. I had the Bitcoin. I was convincing Paul on multiple phone calls that he's wrong on all this stuff. But just on Tuesday, Paul, you do this little thing where you put your head on the pillow and you rest easy knowing that by investing in the non-hype stocks, you don't have to worry about this insanity where you are allowed to buy high and then they restrict you from selling as it plummets. And so a lot of folks are left in a strange situation today. And Paul, there's a number of companies like this right now, some of which you have pulled up. So even you said a lot of people are now looking toward the future is what charts can I go to see overly, this is the next thing, right?
Just Google most
overly shorted.
Just Google most shorted stocks. You'll find it. But guys, I'm recommending you not do that. Let's stick to fundamentals. We're here to create wealth over long periods of time. I'm telling you right now, if you go learn, value investors can make you can make mid-teens return per year. Just do the math on that over a 40-year period of time. You will be wealthy beyond your desires. Somebody in our Paul Super Short chat yesterday said he wanted to be worth 20 million. I said, why 20 million? He said, oh no, I'm willing to do more. That wasn't my question. Why do you pick 20 million? I want everybody in our Patreon to sit there and say, what do I want to retire and live the life I want to live? That's all you should try to do. I do the things I like to do because I like to do them. Does it make me money? Absolutely. That's a luxury I have. But I'm not sitting here saying I will do anything. I could start a Robinhood app tomorrow. Why don't I? Because that doesn't interest me. I don't want to be that guy. We're here to try to build wealth and build fundamentally good, sound decisions so that over time, if you're able to beat just by a few percentage points, it'll lead to millions of dollars extra in retirement. You don't need the GameStops. You don't need the stress of the GameStops because guess what? You're not going to catch it at the right time. If you catch this one at the right time, that can be the worst thing that happens to you because then you'll get addicted. It's like that first hit of drugs, and I've never taken a drug in my life, but I imagine it's like the first hit of cocaine or heroin the first time you get it. You want that high again, and it doesn't happen. Instead, you end up giving oral pleasures to a guy in a back alley in order to try to get some drugs.
So it's funny you say that. We'll do this, and then we'll do whatever else that we were supposed to do. I have a friend who put in a little bit of money into this, and he came out. I think he put in like a couple $1,000. He came out with $200,000 today. I told him, now you have a great amount of seed money to invest like a normal, like we do it, value investing. You were given something by getting lucky.
Yes.
Let's put it that way. What I want him to do is just get rid of that feeling and now start to build wealth to become rich. The problem is I don't know if he's going to do that because that is pretty awesome to make that much money in, 3 days? Let's hope that people that did do that will invest normally. I don't think they will, but hopefully we can grab one or two.
So unfortunately, what I keep seeing from some of our other YouTubers out there, I was going to make a pact with Paul that I want to stay very positive on the show, but I definitely try and do research on some of this stuff so I can learn more, just like you guys are. And I mean, other channels are literally at the same time, they're calling for a class action suit against Robinhood and then advertising their Robinhood the Robinhood link in the description. It's completely asinine and hypocritical, and it's just crazy.
And here's why I don't like this.
Back
in 2008, I had a friend. 2006, I had a friend. He was bragging about all the money he was making in real estate in Florida, investing in these funds, doing developments. 2008 rolls around, all the profit he made, he kept rolling into new funds, lost it all. What did he do? Sued the developer. Paul, he defrauded me. And I looked at him and said, Gene, he defrauded you? Where were you asking those questions when you were making money? If he was defrauding you all that time, you were okay with it just because you were making money? And I think he got my point, but I was sitting there going like, what are you doing, bro? Ask the questions now. The process is what matters. If he had understood the process and brought somebody like me in and said, Paul, can you please look at this? He would have been mad at me as it was going up and up and up, but he'd been very happy the day when he didn't lose any of his money. That's what we're trying to teach here is a process. We're trying to teach the fundamentals and financials of a company. That is what we're trying to do. The app is being created for you to think fundamentally, so you can start asking questions and start realizing what needs to be answered in order for you to make a smart decision for investment. That's it. There are thousands of companies out there to invest in. There are thousands of pieces of real estate, millions of pieces of real estate to buy. We want you to be picky and pick the ones that work for you and your process that you understand. It is that simple. The hard part is the discipline. That's it.
Well, it seems like when that varies or that wavers, Paul, the discipline is that people want to look for someone to blame. So the person I'm talking about is JJ Bittner. He has a show with 100,000, 120,000 subscribers. He's been live today and yesterday for about six hours a day. And Paul, along the same lines, is he's bolstering this idea that it's everyone else's fault that all of these people got into these stocks and now they can't sell. And he made a similar line today, Paul. I didn't want to share this with you because he said, these are the same big, rich firms that in the housing market crash, they let us buy all of these houses. He just said this.
By the way,
it's their fault that they let us buy.
I hate to say this, both sides were equally stupid. But guys, we're getting away from accountability.
Go on.
You're accountable for your own actions. Just like I don't believe in corporate welfare, I don't believe in regular welfare. Be responsible for yourself. You will do very, very well when you're responsible for yourself. That's it. Now, was there taking advantage of people? Absolutely. But was there also a lot of people who were, quote unquote, very smart, who still signed documents they shouldn't have been signing? Absolutely. If that's the way you want to look at it, somebody forced you to do it, then go ahead. But you're going to have a really tough life making money because you're always going to sit there and say, oh, I'll just blame somebody else. I don't like that method. That's just my belief. It's okay to be wrong because you missed out on something that everybody else got lucky on. The question is, are you going to be right when everybody else is saying you're going to be wrong? That's what we're trying to teach here. Go based on fundamentals. Build a portfolio that if you sat there and said, I own these 30 companies as outright in cash, that I would love this, you will do very well.
Do you have any other thoughts moving forward with these incredibly volatile stocks?
I actually don't want to talk about the volatile stocks anymore.
You know, I'm glad because
I want to go to regular companies that really make sense.
Other people are asking the same thing, and it's nice to see you guys are so incredibly disciplined to say, you know what, the hell with this nonsense. While all this is happening, great stocks are going up 4 or 5% today. Great stocks that no one's ever heard of. And I'd love to look at some of them because that's what we do on the show is try and educate you on those non-hype stocks and keep you disciplined and rocking, which has really excelled my portfolio of late, Paul. And I mean, obviously everyone's up, but like you said, I follow the little book that beats the markets, and some of those stocks are just slaying.
My ex-girlfriend, I help her with her money. And I just put her in the little book that beats the market January 1st. She's up 6% this year. I'm like, what is going on? Like even this, I'm like, how is this even happening? Yesterday at one point, the market was down 2%. She was up. At one point, she was up. when the market was down 2%. She ended up the day down 0.4 or 0.6%, which is still better than the 2.5% the market was down. But I'm looking at going, it works. Value investing works, guys. It works over the long haul. And you should see value investing parameters versus big down markets. There are some years when the markets are down 20, 25, 30%, and value investing is up. Up. Not just beating the market, up. How amazing would it be if the market's down 30% and you're up 5%? If you're even. If you're even. So let's get into some real stocks, real companies that we believe in that we want to talk about. Give me one.
Paul, someone brought up, Danelle brought up this company, Meredith Corporation. The ticker is MDP. I'm not saying it's a good one, but I'd love to look at it. I've certainly never heard of it. I'd love to hear your thoughts.
They don't make money. So let's focus on something that makes money.
Okay.
Why don't we, can I throw one out?
Go ahead.
Why don't we do pets? PETS.
That's great. That's been requested a lot. And while Paul pulls it up, again, I will thank you guys. Our patrons are completely incredible. We have so much more in store for you this year. I would say, Paul, that some channels worry about the subscriber account. It's kind of funny. We want to please our patrons as much as possible, and we're coming up with new show content only for you, expanding on our normal videos and offering basically an alternate finishing just for our patrons, meaning Paul and I will go deeper. After we do our YouTube videos, we're doing more content just for you. More live streams, Trader Mo in the $25 group. It's going to explode, and we're happy to have you along the ride. And
now, there's only 100 spots left in the $8. There's only 100 some spots left in the $8 thing. If you're watching, you're not on Patreon yet, and you want all of this data, it's $8 a month if you sign up now. Once that thing is closed, it goes to $12 for the next level. And after that, 16, then 20, then 24. You will get all the software for free as long as you're a patron. Go do it right now.
And the middle tier is going up too. So
everything's going up, guys.
Going up.
I'm rewarding people who are signing up today. Everything's going up.
Absolutely. Paul is a huge fan of loyalty. And for those of us who've been here all along, we know you. Obviously, we love you and remember you. And join us on the ride, which will include 2 of you driving Teslas in the next coming months. At our 50,000 subscriber mark and our 100,000 subscriber mark, we will be giving away 2 Tesla Model 3s to our patrons, not our subscribers, our patrons to join the group. Paul, let's get after pets, baby.
PetMed Express, along with its subsidiaries, a leading nationwide pet pharmacy, etc. So a lot of people have been asking about this. It's a small company market cap-wise, but that's okay. $784 million market cap, okay? PE ratio of 25, so it's an X right now. But I will say this, I bet you there's a lot of growth in this company. It's a small company, there's probably a lot of growth. This might not be a bad PE, and this is exactly what I'm talking about when I say, don't necessarily worry about how many checks and X's it is. It's about getting the story across. If this was a $78 billion company and that was 25, I'd be like, okay. But it's $784 million. So I'm not worried about this.
Okay.
Profit margin.
Profit margin, pillar number 2. Let's
now,
go, baby.
We're going off the profit margin in the last 12 months. It's actually an X. It's a little bit below 10%. The good news is in the last quarter, it was higher than 10%, and they got a good gross margin of 30%. So it's still an X on the profit margin in the last 12 months.
2 hesitant X's, though. Let's go.
2 very hesitant X's.
Revenue growth over the past 5 years is pillar number 3.
I bet you this is going to be, it's actually not as great as I thought.
Go ahead.
235 million to 284 million. So it's a check mark. Yeah! I actually thought the revenue growth would be much higher. That's interesting. Okay. It's actually not even that great, but that's okay. We'll figure it out.
Profit growth is pillar number 4.
Profit growth, 20 to 25. Another check mark.
Yeah.
Look at these big jumps right here. They hit 37 twice.
How about shares outstanding, which is pillar number 5? We want this number going down.
Look at that. This might be the smallest decrease we've ever seen in our lives. 20.12, 20.04. It is a check mark, kids.
How nice.
Literally, that's 80,000 less shares.
Pillar number 6 is current assets greater than current liabilities.
I bet you this is going to be a good one.
We are doing pets.
I bet you this is going to be a good one, kids. Current assets, 141 million. Current liabilities, 26.92. Total liabilities, practically 0. How do they have total current liabilities of... Wait, what the heck? Do you see this?
Go on.
How can current liabilities be 27 million and total liabilities be 0? Something's wrong here. Bottom line is they still have plenty of cash to pay off all their debts. They're good there. This is a major check. It's actually a massive check. So there might be a glitch here in Y charts because look at it this way. Total long-term liabilities is 1.3. Total current is 26.92. So it should be 28.3 million total liabilities. But there's an error in the white charts. Guys, it just goes to show there's errors everywhere. There's an error here. This is quarterly, right? Yeah, it's quarterly. Okay. But still, we'll add those together. We're fine. They still have plenty of money. They have over $100 million left over. They paid off their entire company. That makes the PE, by the way, about 22 instead of 25.
Current assets. I'm sorry, Paul. I was reading comments.
Check mark. Current assets over
marks for pillar number
massive
6.
check marks.
Oh, great. Thanks. All right. Pillar number 7 is free cash flow growth. This is cash from operations minus capital expenditures, Paul. You know that.
1 million to 36.5 million.
Good Lord.
Check mark. 37.4, 36.6, 45, 44.5.
The average free cash flow over the past 5 years is $31 million.
Times 20 equals 620 million. It's a bit too expensive, even taking out. So it's an X.
Slow down a bit. The free cash flow is $624 million. You decide to use your multiplier for pillar number 8, the price to free cash flow as 20.
31 times 20.
To get us the desired market cap.
Of 620.
And the current actual market cap is, did you watch The Price Right when you were a kid?
Yes.
Actual retail price.
Actual market cap is?
874. I'm sorry, 784. Look at me, I
now,
built it up and
remember,
blow
they had
it.
$100 million in extra cash after paying off all debts. So it's actually 684.
684.
Remember, they have total current assets of 140, total liabilities of like 30. So it's about 110 difference. But it's still an X. And I guess my comment is, it's not like the growth was huge. I would still be waiting on this one just a little bit. I don't see the growth being huge. Let's see how their trailing 12 months have looked on the income statement. And remember, guys, all these financials will be available through our app.
Yeah, so when April comes around, folks, we will be getting off of Y charts and getting on the Everything Money software, which you will receive as a patron, where you can look up all this information or just do a simple click and search and get the 8-pillar analysis on any company you like. That is coming, and a phenomenal thing out of Paul's brainchild of getting that done.
So the trailing 12 months, they've made 30 million versus 25. That's a pretty good jump. I mean, is it possible this is worth it at this level? I mean, it actually kind of is. I mean, they got a good balance sheet. Go learn about what are they doing to grow their business. Like PetMed, is it going to be bought by Amazon? Is there something out there that makes them attractive that'll get people to use them more? I never used them, but now I'm going to probably go check it out. I have no idea, but the revenue growth is kind of concerning to me, but they seem to make money pretty confidently and pretty consistently, which I like a lot. So
I did go and do... On Tuesday, I read the 10K of this.
Oh, you did?
Yeah, I did. Phoenix also read it, who's a patron in the $100 level. The biggest concern that I had was that when you take your cat or dog or whatever you have to a vet, they're going to sell you their drugs that they have there. And I think, I don't know for a fact, but I think that these veterinarians make a lot of money on selling drugs, and they can mark the price up a little bit. These guys, it's hard for them to get into these private veterinary offices. So that's the struggle that I see. How are they going to be able to partner with anybody? If I'm taking my dog, I don't have a dog, but if I take my dog in and I'm going to buy flea medication, if they tell me that it's going to be $5 more at the vet and I can just walk out of the door with it versus going home, going on the computer, logging in, getting it shipped to me, I'm going to do that. That's the problem that I see that PetMeds has. But everything else looks great. I still want to do a deeper dive. I would like to actually talk to some of these veterinary clinics to see, do you make a lot of money off of these drugs or that you're selling to the consumer, or would you allow somebody like a PetMed to come in?
What I would like to see PetMeds do, and I don't want this as a strategy necessarily at a time, they don't buy back many shares. If they don't have much growth potential, they need to take their cash flow and buy shares back, because that's how they're going to increase the per share profit and make their investors much more money. Because they're sitting on a lot of cash, $100 million in cash. They can go retire 15% of their shares and immediately drive up prices 15%.
Warren asked a great question. Why look at PE if price to free cash flow tells a more clear story? I think you're looking at both, really, right?
We look at both, and here's a good question. If there's a big disconnect and it happens over time, it could be an indication of fraud. That sounds extreme, but that's what I look at. I want to see how are they looking to each other. And this one's pretty consistent, about 25 times earnings, about 25 free cash flow. You still look at them as a check and balance. some companies also, real estate companies, you don't look at PE as much as you look at free cash flow because the earnings part has so much depreciation and amortization and non-cash expenses that don't apply. So that's why we look at them. That's a very good question. But earnings don't always tell you the full story. And cash flow is a little bit better, I think, at telling the long-term story.
That does seem extreme, Paul, when you bring up fraud in companies. But we have actually caught months down the road, we have analyzed this where you brought this up, and fraud was, in fact, happening in some of these companies we've analyzed over the year. So, all right, final take on pets, Paul. What do you think?
I think it's do more due diligence. I'm not afraid of it. I think that as time goes on and people want to leave their houses less and less, and I also do think that if they're able to grow, this would be a great thing for Amazon. Maybe they become the go. What would it take for Amazon to buy this company for $2 billion? It would take nothing. It would just be like, hey, we're worth $2 trillion. We're going to give you 0.1% of our company. Take it. And it'd probably be easy to do that.
Mo, do you think you'll talk more about this in your $25 tier on Patreon?
I don't know if we'll talk about it from a value standpoint, but from a chart standpoint. So these guys actually did get a little bit short squeezed yesterday. Their price skyrocketed from about just under $40 to almost $60 yesterday, and it came right back down today. Now they're down 26.5%. But from a charting aspect, this isn't a downtrend right now. We're going to look at this. This actually looks like a pretty good short coming in. If we can get below some of these moving averages, which are some of the key indicators, 25-day, 50-day, 100-day, and 200-day, this would turn out to be a really great short.
That's our take on pets, folks. Shall we move on, Paul?
Let's move on.
The next company on request, I see a lot of you talking about it, Paul, has pulled up Nestle, right, Paul? You want to do Nestle?
So Nestle is a foreign company.
Yeah.
With foreign company, yeah, it's foreign.
Okay.
I'm fine with that. It's just, it's going to be harder and harder to look at from a, look, for example, at this. I don't know why this is happening, but it's showing no PE, yet the trailing 12 months shows a big profit. So I don't know if there's a disconnect in the data. So we have to calculate this PE ourselves because I don't see why the trailing 12 months has a $14 billion profit, but the PE is showing zero, not applicable. So Seth, do you mind pulling out your calculator? We can do this by hand.
Oh, I'm really good at this, so yeah.
So $330 billion market cap. Seth, take 333 and divide it by 13.8.
13.8. This is an easy one, Paul. It's 24.1. 24.
Okay. That's an X. That's their PE in the last 12 months, according to this data. Now, if anybody wants to come out here and go, Paul, you're wrong. I'm going off the data that's provided to me by Y Charts, and their data is provided by another source. So that's where we're at. Now, profit margin, check mark on both trailing 12 months. So we have check mark here. And gross margin. Look at that gross margin, almost 50%. That's really, really high. That means for every dollar they sell extra, they make about 50 cents in profit on that dollar to the bottom line. And a dividend here of 2.37%. Seth, could you pull up that calculator one more time?
I got it.
333 times 0.0237.
Their dividend is 7.9 million?
Billion.
Billion.
Let's call it $8 billion.
$8 billion.
So we need to make sure that their free cash flow, which free cash flow is used to pay out dividends, buy back shares, et cetera, can support this $8 billion dividend all day. We don't want them to have $9 billion in free cash flow and then pay $8 billion out to dividends. We might be okay with that, but it's not as safe. So that'll be, so far right now we have one check and one X. The one X is PE because it's 24.
Revenue growth over the past 5 years is pillar number 3.
Revenue growth the last 5 years, 92.5, 93.5. Check mark, very slow growing company. So when we go back in the future, when we go to the price of free cash flow, we want a lower multiple because there isn't much growth here. It's a very mature company. So right now it is a check mark.
Pillar number 4 is profit growth, Paul.
The profit growth, 9.4 billion to 12.7. Check mark there.
Nice.
It's a little bit over the board, so this is a great opportunity to do averages here as opposed to anything else.
Shares outstanding, which is pillar number 5.
And we have 3.13, 2.93. Check mark there.
Wow.
Decreased about 6 or 7% off their shares outstanding.
Current assets over current liabilities is pillar number 6, Paul.
Current assets, 29.6 billion, call it 30 billion. Current liabilities, 40 billion. So they're upside down here, guys. Now, in the food business, we tend to see that a lot. Let's go back to a couple of quarters ago. Let's go back to 8 quarters ago, 30.5 versus 37.7. So it seems like it's a pretty consistent thing in the business. That's not a bad thing necessarily. Food business tends to be that way. And now for our favorite.
This is free cash flow. Sorry, Paul. I'm reading some very interesting comments, but I'll get to them after this. Free cash flow growth is pillar number 7.
So free cash flow 5 years ago was $14.4 billion, and recently it was $11.7 billion. So that's an X. And then for the average, 11.1, 9.7, and 11.2.
The average free cash flow is 11.6.
11.6 times. Now, we usually do 20.
This
is a slow-moving company, but a great brand. I'm going to call it 15. That's 174. Is that right?
That's right.
174 billion. God, I'm so good at math sometimes.
But
then I screw up sometimes. I'm like, 2 plus 2 is 12.
Yep.
2 plus 2 is potato. So 174 billion. It's currently 333 billion. It needs to fall basically in half.
Oh, they're saying your first calculation, the 14 billion, is incorrect.
Oh, that's correct.
Yeah.
You're right. Ooh, look how I was bragging about math.
Thanks, Spicer.
10.4 billion. It's even worse then.
Okay, it's worse.
Yeah, it's worse then.
You want me to redo it real quick?
No, you're fine. 4 divided by 1, so it's probably 10.8 or so times 15. It's even worse. Here I was bragging about my math. I can do the hard math. I can't do the easy one.
That came back to get you, yeah.
10.8, that's 150. 8 times 5 is 412. So 12 and 150, $162 billion. So it's got to fall in half, guys. Almost to the dollar. Did I do another math mistake?
GameStop has you frazzled. That's what people are saying.
That was awesome.
Guys, there's an X here too, but this is a check now. The free cash flow is actually a check now then, because it went from 10.4 to...
hey now.
Yeah. There is increasing free cash flow, which is great, but this price is too high. And I think when I look at this and I go, yeah, I do think this is a great company to look at, but you got to wait until it falls significantly in price because, I don't know. It's just, Nestle's great. Don't get me wrong.
They're right over there in Solon.
Yeah, they have a big office there in Solon.
Yeah.
I thought you were saying they were based out of there. I'm like, no, they're based out of like Switzerland or something.
Yeah,
Final take on Nestle, Paul?
I think just add it to your list to watch and wait for them to fall. Let's see how their last 12 months are. Hang on a second. They did 93.4. So their revenue is down. Their profit was up slightly. That's interesting. Would you look at that? So here's a deal of foreign companies. They only report like these half years. Okay. I like Nestle as not as is, but remember, if it falls in half, your dividend of 2.some% will go to 5% something. Your dividend right now is 2.37, so it's going to go to 4.75% if it falls in half. And it can afford the dividend. I think it's a big chunk of but they're not buying back shares in big volume. And they're probably they're going to do acquisitions, probably going to use some debt on it. So, guys, I think, I don't know, I like this as a play if the price falls a lot. I like it a lot as a play if the price falls.
Billy's asking if we can look at momentum for this.
Let's look at momentum. Do you want to take that over? Oh, I have to do it right here.
Take momentum.
So, guys, something exciting we're doing. Pretty soon, we're going to have another whiteboard.
Oh, this is a big announcement. Hold on, Paul. I need a drum roll, but I don't have one. But go ahead.
This was Mo's idea. He was in the shower thinking about me.
I actually got out of the shower, soap all over me, and I ran to my phone. I was like, I have to text the group.
Now listen, I love this. You know why, Paul? I'm a huge fan of this, folks. I read books about sleep and study pattern thought in the shower. You actually, in the shower, right before bed, when you're napping, the part of your brain which makes decisions shuts down and creativity flows. So this is not surprising. Some people say when you need to be creative, just go get in your car and drive around.
My best time is
that's what I'm saying.
In the car.
But anyway, I digress. Paul, give us this amazing announcement.
We're getting another whiteboard. We're going to put it over there behind Sethi. Sethi's going to go in the middle, and we're going to be able to have Mo pull his charts up so he can actually draw on the charts, showing you exactly what he's looking at as he's doing this trading idea.
Yeah.
Yeah, and this decision alone by Paul will probably cost him about $10,000 in lighting, boards, setups, computers, microphones, and cameras.
And the funny part is, you were like, "Well, Paul's going to cost a lot of money." Yes, what did I say?
You just said,
F it. I said, F it.
F it. Let's go. Let's go. So that's what will be happening.
Don't tell my brother.
As soon as possible, we'll be getting a second
Mason,
board.
don't tell Mikey.
We'll be getting a second board in here with Mo showing you the charts for trading. It's going to be completely absurd. So there you go, folks. Okay, Paul, you pulled up momentum for Nestle. Let's take a look, brother.
So remember, the blue line here is the 200-day moving average. The orange line is the 300-day. It is a very positive sign when the 200-day goes above the 300-day. and it's a negative sign when it goes below. We recommend, when we back tested this for 20 years on 75 stocks, if you followed this, where you bought when it goes above the 300-day and you sold when the 200-day goes below, you beat the market. By how much? 1 or 2%, not a lot. Definitely over 1. I think it's exactly 2%. So right now, the 200-day cross the 300-day around $87, $88 a share about 2 years ago. And you've been riding this thing all the way up to 117. That's pretty awesome. So it's in an upward trend right now still. Don't enter it yet. You want to wait for these signals to actually occur. So don't go in and go, oh, I'm looking at the stock, it's above, I should buy. No, you want to buy and you want to sell when the actual triggers happen. So get your big portfolio of stocks that you want to look at if you want to do this, and constantly be getting updates on when they happen.
Okay, that was Nestle. Thanks, guys. That was incredible. Yeah, that was great. People are loving it. I would say, Paul, Daniil is begging us that MDP, he's doing his diligence on this thing, and I think he wants you to take a look. I think he wants you to take a look, and I'm happy that he's working so hard. He's what is this again? What company is that?
Focuses on Meredith Corp is an American media company that focuses on publications and marketing services around the home, family, food, and lifestyle markets. National media and local media. Rachel Ray, Better Homes and Gardens, Family Fun. Okay.
Can we do it?
They own 15 television stations.
He's saying PE is low due to an acquisition, but the price of free cash flow.
Well, first off, PE is not affected by acquisitions. Acquisitions do not hit the bottom line. Acquisitions are a balance sheet and cash flow statement transaction. They do not appear on the income statement. And in fact, this company does not make money in the last 12 months. They've actually lost money in the last 12 months. There could be a lot of reasons for that. Last quarter, they made money, but they currently do not even have a PE over the last 12 months. So remember, guys, I hear this all the time. Acquisitions are not, you don't, when you calculate free cash flow.
Oh, I'm sorry. He didn't say PE. He said net income. I'm sorry. Net income is low.
So net income, that's again, same thing. Essentially, net income is the bottom, there's the E in PE. That's not affected by acquisitions. Now, the only thing it could affect is if there are charges taken to the acquisitions that are amortized, the portion of them are taken out in net income at a certain time, but that would be an ongoing expense thing. So that is a very good comment to make. I'm glad you made it. But when people, the most common comment I get in the section is, well, Paul, their free cash flow is low because of an acquisition. Free cash flow is before the acquisition. You calculate cash from operations less your capital expenditures, and then the next line is subtracting out acquisitions and dispositions. So we'll still look at this, but there is a negative to PE right now.
Okay, so two straight checks off the bat. Let's look at revenue.
No.
I'm sorry.
X's.
X's, of
X
course.
there. Margin is X, even if we have it. They used to pay a 10% dividend. That is bye-bye. That has gone away. So we have two X's. It's about $1 billion company.
Okay, and this is MDP, $1 billion. Revenue growth over the past 5 years?
They do have revenue growth, 1.24 to 2.75. Check mark there. Some big jumps here, guys. Was there acquisitions here? So here's what I'm going to do now. I'm going to look at their cash flow statement and see if an acquisition was done here, because that is a big jump. So I'm going to skip right to acquisitions, where I can show you guys right here. Ah, there it is.
What is this?
This is the cash flow statement, the investing section of the cash flow statement. Net divestitures and acquisitions. Acquisitions are a negative number. 2 years ago, they spent $2.8 billion buying a company. That is why their revenue jumped up so much. So this is how you tell the story after looking at the 8 pillars. You tell the story, you get the answers, and you find out what they bought. Okay? They make acquisitions pretty much every year. There's a lot of negative numbers here. This is a positive number right here.
Right?
What?
You like acquisitions, right?
Listen, it's like saying,
I know.
You like clothes, right? It's like, well, I'm not going to wear a evening gown to work, you know what I mean?
But you would at 100,000 subscribers wear an evening gown for a whole show, wouldn't you?
Probably would.
By the way, folks, for the patrons out there, I am going to jump on more often. I want to do a little live stream with you to learn from you guys some more ideas, maybe a little more connecting between you and I. I want to get more ideas from you and zany bits that we want to do. Paul and I are totally for zany bits. Paul has offered tens of thousands of dollars to people to cut their own fingers off. I'm not kidding. To do zany...
Mason's brother agreed to it and then backed out at the last second.
So, like, if we have ideas, maybe not so much now, but we're going to talk about some zany bits, including, I think at the million subscriber mark, I will get tattooed on my butt cheek, Paul's face, and other zany stuff. So we're open to ideas. If you queue it up, we very well might do it. Anyway, I get back to Paul. Let's get back to MDP. We were looking at profit growth. We just looked at revenue.
So
Go ahead, Mo.
One second. In 2018, Time Inc. That's who they bought. They bought Time Inc.
Oh, they bought Time Inc.
for $2.8 billion, and that closed on January 31st of 18.
Wow, Time Inc. Huh?
Yep.
These are the guys who picked Time Magazine's. I remember Time Magazine's Person of the Year in 2004 or 5 was you.
Isn't that nice?
Oh my
No, it's the
God.
stupidest thing I've ever heard in my entire life. I lost all respect for Time Magazine Man of the Year,
That sounds like
Person of the
something
Year
that's
when they
gonna
did
happen
you.
again.
Like, you brought us
Nowadays.
YouTube, you brought us this, you brought us.
Spice
Like,
it a
shut
little
up,
bit.
you losers. All right,
Oh, you're so positive, Paul.
$34 million in profit, negative $234 million.
Uh-oh.
X. They lost a lot of money in the last year. That was the pandemic time. It is what it is.
How about shares outstanding, pillar number 5?
Well, good news there. Not. 44.6 to 45.7. X.
That was like Borat. Yeah. Current assets over current liabilities.
Let's see if these guys like having cash on hand. $1 billion in cash, $750 million in current liabilities. Well done. Got a lot of debt too. $5 billion in debt in the publishing business. I have to understand that one. Now, free cash flow over the last 5
number
years.
7, yes.
Okay, ready? 200 million. Make sure I did that right. I did. And 250 million. Check mark.
Okay.
So look at it. Last year, they had a negative on PE with free cash flow of 250. They lost 234. They might have had some write-offs or something. So that's why we don't always look at just PE. Do you see what I'm saying?
Go on.
There was free cash flow last year, even though the profit in the company, the net income was negative. There might have been a write-off. There might have been an acquisition they did years ago they wrote off completely, or several acquisitions. That's what you have to understand.
Go on.
So the average. Ready, Seth?
I'm ready.
184, 97, 200.
The average free cash flow over the past 5 years is 186 million.
Okay, I'm not a huge fan of this. So here's the deal, guys. This is where we talk about the multiple. You gotta decide how much multiple, how much room you want in. I will say this, the company's currently what, $1 billion?
Yeah, 1 billion is the market cap.
Wow, it's selling for 5 times free cash flow. So look, 981 is the current market cap divided by 186. What's that equal? 5? Or a little bit over 5?
If you're asking me, I wasn't paying attention.
Call it 5 just to be safe, just to be low. It's 5. I mean, that screams there's something you want to do. I mean, that's pretty low. So I do give them credit for finding a very low free cash flow business. Let's see how very low multiple of free cash flow. Even last year, they did $350 million in free cash flow last year. Okay, here's what I'm gonna say about this company. I'm intrigued. Here are the things you need to look at. Why is the free cash flow and the net income so different? Find out why that is. Because I like those kind of businesses, because usually what happens is they'll have a big write-off. Everybody will freak out because they'll see the net income number. That's all people look at. And they'll say, this company's going to hell, this thing sucks, move on. And then the free cash flow is still there. I still remember one of the best investors I ever said, when he showed me a company once, the first thing I said was, oh, look at the PE. He goes, don't look at the PE, look at the free cash flow. I said, oh, and I looked at free cash flow. I'm like, holy cow. It was like 7 times free cash flow. Why? Because everybody was focused too much on their recent write-off. They had a big write-off in the last year, and everybody's focused on that, as opposed to they had a write-off. And if the write-off happens every single year, you should factor it in. But if it's once every 10 or 15, 20 years because they made a mistake, they're impairing their charges, Seth is giggling, I don't know why, then I think this is something to look at.
That's a great take on MDP.
Why are you giggling, Big
Well,
Shot?
you know, people are like, Seth's a nice guy, but he's got to have an IQ of like 80, which is hilarious because I have a PhD in chemistry. What you don't know is while Paul's jibber-jabbing, I'm trying to produce the show, listen to all of your things, pull up new stocks, get information, and kind of screen them before I take them to Paul. But I appreciate your comments. You guys are hilarious. And both of my kids are watching, so I appreciate that.
Hi, guys.
Paul, great. Yeah, that was pretty interesting.
Yeah, I'm not opposed. I mean, the free cash flow multiple is pretty awesome.
We have a lot of suggestions for TGNA, which is Tegna Inc. What is this, Paul? Tegna Inc. is an American publicly traded broadcast, digital media, and marketing service
Media company with a portfolio of broadcast stations, digital sites. The firm has around 62 television stations, more than 3 radio stations in 51 U.S. markets. Blah, blah, blah. The company's, oh, look, the Justice Network.
Is this
What is that?
I don't know.
I have no idea what the Justice Network is. Can anybody tell me what the Justice Network is?
Okay. Like, what am I missing here?
Okay, let's do Tegna, Paul.
Oh.
Let's do Tegna.
All right, guys. Let's do the Justice Network. $3.5 billion market cap.
Okay.
11 PE. Check mark off the dribble.
Hey.
Definitely a check on the what's it called? Profit margin? Look
Wow.
at that gross margin, almost 50%. And a dividend yield of 1.8%. So what is that? Roughly $630 million? No, $63 million. What's 3.5 billion times 1.8?
I'm sorry, I'm reading comments. Say it again, Paul.
3.5 times 1.8.
6.3.
$63 million dividend yield. Dividend is being paid. Okay, so 2 check marks so far. It is a TV station, guys. You always have to be very apprehensive because look what we're doing right now. We're on YouTube right now. We're broadcasting on YouTube. There's going to be a lot of, but that might explain the low multiple.
Pillar number 3 is revenue growth for Tegna.
Look at this. They did 5.3 billion. They must have sold a lot of stuff. But anyways, 1.76, 2.3. Check mark there.
Wow, okay, 3 for 3. How about profit growth, Paul?
The profit growth. Oh boy. 459 down to 286.
Heyo.
X.
Nobody got time for that.
So you want to see why there's a big drop there? Let's look above. Looking from the window above, it's like a story of love. All right, we'll go to the next ones.
I like Max Equity said Seth is low key Walter White.
Seth is low-key Walter White.
Yeah, I would say when like I would say is I don't know what I'm talking about when it comes to a lot of things that Paul does. But in retrospect, Paul, my PhD
Let's hear it.
thesis.
Here we go.
My PhD thesis was the synthesis and characterization of mercaptothiol icosahedral borane structures. So if you want to know about those, hit me up on Patreon.
Slide into his DMs.
Slide into my DMs about those borane compounds and their anti-cancer effects because I know all about those. Go ahead, Paul. We are moving on to shares outstanding, which is pillar number 5 for Tegna.
224 to 217, check mark, but I want to make note it's increased the last few years.
Uh-oh.
But it is still a check mark.
Current assets over current liabilities. Oh, and somebody said we should do karaoke one day. Hell
that'd be
yeah,
excellent.
Goldie. That's a great. Current assets over current liabilities is pillar number 6. I'm sorry, I digress.
763 million versus 399 million. So check mark there. They have a lot of liabilities. Stations, TV stations tend to, I think. That's why you have a lot of debt, etc. But it is a check mark for that.
We have 5 checks out of 6. Let's go to free cash flow growth, which is pillar number 7.
Okay. 533 to 209.
Uh-oh.
X.
Oh, boy.
Average of 584, 313, the 3 1/3, and 562.
So kind of all over the place, Paul.
Way all over the place.
The average free cash flow is 440.
Well, guess what?
Go on. Oh, wow. Look
440,
at that.
really?
Look at that. So here we go, folks. This is Tegna. We found the average free cash flow to be 440 million. So we'll have a multiple to get to our desired market cap. But the real market cap is 3.5 bill, Paul. This is why you're
3.5 divided by 440 is 8. Yes. 8. I can do it 12 times before Seth can even
Yeah,
type it.
it's 8. You keep. I don't know if you're being you're talking out loud or asking me. Well, we've only been doing this for 2 years. We'll figure this out, folks.
So
I
guys,
swear.
it's 8, which is awesome. PE of 10, pretty consistent. But I want to make note, the last year was a big drop in free cash flow. You need to understand that why. Even though the average of the last 5 years is good, if it's starting to decrease or you have a big drop, you need to understand why. We saw their profit drop big time last year. You need to understand why. So the free cash flow dropped and the profit dropped. Usually if I see a difference there with the profit dropping and the free cash flow staying up, I like that because it tells me, oh, might have been one kind of small event. But the fact that both dropped tells me there might be an operating income problem. Let's look at the trailing 12 months.
That's a great idea. Fabi One's Tech Vault just brought that up. Let's look at the trailing 12.
Okay, $530 million in the last 12 months in free cash flow.
Did we miss a dividend on this stock, Paul?
1.8%. It was
Okay.
oh wait, What was the 60? Yeah, they can easily afford the dividend. They're good.
Okay.
The dividend was 64 million, 68 million, and their free cash flow is well above that.
Okay.
Guys, I love that, by the way. Several times the dividend. Thanks for catching that, by the way. Several times the dividend. The dividend's probably okay.
Okay.
So from a free cash flow perspective, guys, go research this. Make sure that last year was an aberration. When I say last year, 2019. 2019 was hopefully a fluke. But also understand, what are they doing to account for the world of digital media? What are they doing to account, us going to streaming services? The TV stations are all great and dandy, but if they don't have a way to get to that next, to get to the level they need to be to account for what's changing in the world, you're just on a sinking ship. So, and also their debt. Their debt's $5 billion on revenue of 3, was it? Revenue of 2.7. So please try to figure out what's going on with their debt levels.
So I like this on a chart. This thing, to me, I'm looking at it, and I actually just typed it in the Discord chat for the Mo's Muscles group. We're going to look at this when I get back upstairs, because this thing, if we can get some buying to come into this stock, this thing can, I'm seeing a possible 20% move, and there's very little resistance above it. So this might be something we're going to trade. We're going to look at this and maybe start a trade on this afternoon.
If you join the Patreon, you can join Mo in making this trade. Obviously, this is for, what did they say, Paul? This is for entertainment purposes only. But again, basically, we're trying to teach you a process of investing. And if you join the Patreon, you can listen to Mo's process. And if you'd like to follow it, he can certainly guide you in that direction. So, Paul, that was Tegna Group. Tegna. All right. We're doing great, Paul.
Ligma? Was it Ligma?
No, I think we should look at, what about Shaw Communications, SJR?
What's with the media companies say?
I think people are doing some work on this and finding things they like.
What's SJR?
SJR, yes. Shaw Communications.
Canada. Telecom. One of the biggest providers of internet, television, and landline telephone service. So it's kind of like a Spectrum. Is that what it is?
CenturyLink.
Oh.
Say that, Don?
I would say they're closer to CenturyLink.
CenturyLink, okay.
All right, cool. That cool.
Market cap, Paul. It's Paul, right?
Why are you laughing?
I'm not. I'm always laughing.
$8.8 billion. PE of 17.8, so it's a check mark because we want lower than 20. Doesn't mean that makes it great. Trailing 12 months profit margin about 12.5%. Check mark there.
That's good too.
Very high gross margin, over 50%. I like it so far, and a nice little dividend right here.
5.5. I like that too.
What is that? 4.4. Call it 500 million dollars to be safe. Just to be safe, it's less than 500 million, but we'll call it $500 million just to be safe.
Okay. Pillar number 3 is revenue growth.
We'll go to the financial statements,
Please
annuals, annuals. 3.4, 4.0. Check mark there.
Profit growth is pillar number 4.
The profit. Ooh.
Uh-oh.
920 down to 511.
Ain't nobody got time for that.
And look at these years. They had a much higher profit that was very consistent. So by the way, guys, if you looked at the company at this point, what would you have thought? You're like, oh, wow, 720, 738, 795, 709, 919, and then collapse city. So just remember that, guys, that everything goes forever. Even if the numbers look good here, you have to understand the future story of the company.
Pillar number 5 is shares outstanding. We want this going down.
480, 515, another X. Okay, so we're striking out over here a little bit.
Okay, current assets over current liabilities is pillar number 6.
Current assets over current liabilities. Current assets are $1 billion. Current liabilities are $1,180,000. So X marks the spot there as well.
Ain't nobody got time for that.
Yeah, we're striking out here, guys.
3 checks, 3 X's. Pillar number 7 is free cash flow growth for Shaw Communications.
All right, ready? 450 million. Right? I did that right. 800 and 450. And then let's call it 600 million just to be safe. So check mark there, just to be high. It's high. It's like 500 and whatever, but we'll call it 600 million. And then negative 100. 0.
Okay.
And then, oh boy, this is bad. And then 200.
All over. The free cash flow average is 230
What
million.
the heck is going on over here? Guys, so it's currently selling for They can't even afford their dividend. So that's the first thing.
Yeah, the dividend of 5.4% was $500 million.
Okay,
dividend.
so they can afford it barely, but they owe for the last 4 years, because they've only made, $550 million in 4 years in free cash flow. I don't know about this one. This one's kind of tough. First off, the current company is $8.8 billion divided by 230 is 40 times free cash flow, something like that, 30 some times free cash flow. So that's an X. Call it 38, I have no idea. That's an X. Guys, I want to make note of something. This is very important to me. So on Shaw, here's what I want to say. Yesterday I got an email from one of our patrons who sent me, and I guess this happens all the time, they sent me a real estate deal. And I always tell people, if you give me my 7 things I need, here's the list, I'll give you an answer in minutes. He gave me the list, literally 2 minutes later, I had the response to him, as well as the minute explanation as to why I wasn't doing the deal. And he goes, wow, you really were serious about that. It doesn't take much from a 500-foot view to look at a company. Now, going in detail and understanding exactly, but my investment philosophy and what works for me is I want to see the high level look good, and then I want to go deeper. That's my style. I'm not saying it's the right style for you, but for me, that's what style works for me. You have to find out what works for you. For me, I want to see the high level and go, yeah. As soon as I see 30 times free cash flow, I go, poop. I just go, okay, moving on. Let me find something else. Because all the other numbers didn't make, we had many X's there. We had not enough money to pay the debts. We have a lot of debt going on. What was the other thing, Seth?
Yeah, I mean, for Shaw Communications, their PE was good, their profit was good.
Oh, so their PE was good, but yet their free cash flow was bad. That's a big red flag for me. I don't know why that is.
They have more liabilities than assets, but they did have the free cash flow is all over the place. So
they can't handle their dividend. Basically, it's just I feel like to me, I'm gonna find a better company. Now, if I go down the road of 100 companies, I don't find one. Then from there, I start weeding out. Okay, what else is there? Let me dig deeper. But I'm a big believer in find the ones that make sense financially, and then go dig deeper and pick the best ones out of those. That's the ones that make sense to me. That's my style. I'm not saying it's the right thing for you. That's my style that I kind of preach about. And if it sticks with you, awesome.
Some of our patrons are requesting, Paul. Do you want to keep going? How are you feeling? Someone asked, have you ever, Rude Van der Zee asked, have you guys ever back-tested the 8 pillars over the years?
Yes, I have.
Yep.
Talk about it.
We back-tested it. I back-tested it as well as I could over 20 years, and it crushed the market.
Crushed
the market by 4% a year?
Yeah.
Something like that.
Crushed.
Now, I based it on S&P 500 companies, and I did a video on our Patreon. There's a Patreon video. I don't remember what the number was exactly, but there was a Patreon video where I back-tested it. Here's the bottom line, guys. If you back-test 2 or 3 value metrics over long periods of time and stick to 25 or 30 stocks, it always beats. That's what's amazing. Now, I will say this, though, about value investing. Here's how value investing works. Let's say this is the market return, okay? Below this means you lost the market. Above this means you beat the market. Here's how it looks from year to year. So year 1, 2, 3, 4, 5, 6, 7, 8, 9, etc. Here's what it does. So what happens is people go, okay, I crushed, and I didn't do so well this year. Value investing sucks. Then they all get out. Then it works again. That's the thing you're going to see all the time with value investing. The value investing parameters I believe in, the last 5 years have done terrible. They haven't beaten the market. Every single year they trail the market. Guess how much that affects me? 0. I still believe in value investing. I still do it. It helps me sleep at night. And even if I match the market, I'm taking less risk to match the market. That's what I care about. I'm taking less risk to equate the market. And guess what? I'm fully confident that in value investing, the metrics that I do, I'll beat the market by several percentage points a year. If I add my option strategy in there, it'll be even higher. Like Mo and I discuss how much over 15% a year we can get over the next 20 or 30 years. That's what we really truly believe based on what we've done, and we think we're being conservative. Now, options are a big part of that, which based on our size and our portfolio size, we can do a lot of options. Options are 100 share contracts, but we do backtest things, and basically every single time I backtest 2 or 3 value metrics, every single time it beats. I've never seen one not beat the market over a 20-year period. Literally not one time.
We would even take metrics that we wouldn't use just to see if they worked, and they still beat. That's the incredible thing.
If I picked metrics that I thought were not value related, and I tested it over long periods of time, they didn't work.
Exactly.
So that's what some people sit there and criticize backtesting. I do not. I criticize looking at something and saying, how do I find patterns? I make a thesis and then go test the thesis. Okay, my thesis is free cash flow, price of free cash flow, return on assets, blah, 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 or what works. Backtest. Oh my God, it does work. My thesis is high PE, high free cash flow. All these things don't work. Backtest the thesis. Oh my God, it doesn't work. Those things, when that happens, I don't hate backtesting. I hate backtesting when it's, okay, well, the NFC beats the AFC. The market beats every year that happens. That has nothing to do with these metrics, NFC and AFC. I'm talking about football. Has nothing to do with anything.
What about the Puppy Bowl? Do you watch that, Paul?
I
know
don't
you
watch
like
the Puppy Bowl.
The Puppy Bowl.
I have my own Puppy Bowl at the house.
That's true. Every day.
Howard is always offsides. It's like offsides.
You have a whole herd of puppies.
Or full start, depending which way he's going.
So I do believe in backtesting. I use it to test my ideas. It's wonderful.
Again, folks, I represent you, the average Joe watching this. And I also watch, again, I do research and watch other channels. And I hate to bring it up, but like, I literally sit here and marvel at Paul and Mo. Obviously, these guys really know what the hell they're talking about, where maybe you and I don't. And the goal is, if you join along with us, this may take a year. This is not a 10x, 20x endeavor.
This may take years.
Years to learn the process. And as Paul says, so you can rest easier at night knowing that your money's in the right spot and not in crazy spots. And so we appreciate your amazing support, all of our patrons, you know.
Can I say something?
Go ahead, Paul.
We just got 7 patrons in the last 30 minutes.
Well, that's
this is going to fill up very, very fast, guys.
Fill up.
We welcome you guys.
And thank you very much for all that. Coach Mario, Paul Walker, rest in peace. Lawrence, Danetta, Nick, Tim, and Shihab. Thank you very much for joining our patron.
Yeah, I think, folks, Paul, I'll say again, Paul was very much against the Patreon. He certainly does not need your money. But what we're going to give you with the Patreon is an experience you will not get with other channels. The software is going to blow your mind. Our patrons know it. We've already had some not so much beta testing, but we have some draw-ups and schematics that we've been voting on in Patreon, and it's so exciting, Paul, to see it come to fruition.
Want me to pull it up?
Please. Oh wow, you want to do that right now?
I want to pull up the exact. Focus on Seth. Put the camera on him.
Sure. So
Don, put the camera on.
What we're saying is this is the most asked question, and I'm kind of with you folks. I'm wondering like. What is this? I didn't even know. I'm literally telling Paul, like, it's now coming into my mind. But the most asked question we get is, where do I get this data? Now, Y charts cost someone maybe $300 to $500 a month to get this data. Then you have to dissect it. You have to be smart enough to go through the pillars, find all the stuff, do the math, and do it. What we're developing for our Patreon, and frankly, for anyone else down the future, if they want to purchase it, is actual software that does it's a simple one-click 8-pillar analysis, like Paul's spreadsheets, that will give you the information on these stocks in a heartbeat. And Paul, you have some graphics here.
Here it is, guys. So this is how it's going to look. It matches our green, orange, blue kind of look. Now, one of the things that'll be different, though, we're going to have probably a little bit bigger text. We're going to have the 8-pillar tab here. That's being worked on right now. And then over here to the left of income statements, they'll be shifted. There'll be the main data, like the high point data. But look at all this, guys. And the 8-pillar tab, you'll click on it. It'll have all 8 pillars like this, tell you what they are, check mark, X, all that stuff. This is going to be awesome. It was voted on by a lot of our patrons. This is the one that won by a large shot. And we're incorporating some more orange into this. We're super excited because I love orange. I think it's very drawing. I think it's part of our look. It's awesome.
Paul, when people are really adamant, I feel like we should maybe look at one more. What do you think? Then we'll end with some Q&A.
Look what Steven just said. I never joined a Patreon before, ever. And I joined the EM Patreon a while back, and it's insane how cool it is. So much knowledge in there, and people to talk to and ask questions about stocks.
That's just it, Paul. And Mo has even said this, folks. A guy who's trading millions of dollars simply says that it's just nice to have somebody to talk to. Am I right, Mo?
Yeah, that's the thing. It's nice to just bounce your ideas off of somebody. It's cool to kind of just be in this community and to have access to me and Paul. I think it's invaluable.
By the way, can I make an announcement?
Please do.
Yesterday, Mo found T-shirts. I ordered 2 T-shirts online.
Go on.
One says, Can't stop, won't stop, GameStop.
That's nice.
And the other one is a rocket going and it says GME to the moon. And I can't wait to wear it on the live stream. Hopefully, I think I just got a notification. It got delivered because it said, "Hope you like your new gear."
Already?
Well, it got shipped yesterday.
Wow.
Martinez is asking, will there be technical analysis in the app?
Not off the dribble,
Not
but
right away.
that's a lot harder to develop than just this data stuff. But we are going to be building a separate charting system for Mo at some point. That system alone will cost hundreds of thousands of dollars. So we need to plan it out and make sure we're doing it the right way to start. But guys, when I tell you, you're signing up today for financials and 8 pillars. But we're going to add more software to it. And apart from most trading software, all the software will be included, no charge to you. You stay, whatever you're paying right now, you are in that level forever. Now, will that level go up? Very little over time as our costs go up. But if our $8 level goes to 12, you still stay at 8. Next people get it for 12. Then next people get it for 16 and 20. This software is worth well over $50 a month. At first it was gonna be $30, $35 a month, but I've added more things I want in there. I want personal financial software. I want loan software. All these things that we're gonna do to this thing. You are signing up not just for the community, you're signing up for really awesome software that'll help make your life much more successful and well worth it financially. What are you giggling about there, Big Shot?
These comments.
What are they?
These comments. Someone said, plot twist. Seth has the brains in this operation. Unsubbed.
I
love the word plot twist.
That is great. Yeah. And that
plot twist is like when Seth did the whole news flag. What'd you say in Mexico? Breaking news out of Manzanillo.
Breaking news out of Manzanillo.
Oh, God.
Tough news out of Manzanillo.
Tough news.
So you're fired.
You're fired.
Oh, my God, guys. This is incredible. Wow. You guys are incredible. I could just read this all damn day. Okay. Paul, do you want to do one more or do you want to take Q&As?
Q&A.
Q&A.
All right, folks. Some of the stocks you're requesting, Paul and I will do videos on it if they're sexy enough. At least Paul on a first glance. We don't like doing videos where it's like just super hype, but I like some of the companies you're giving us. So in terms of general Q&A, I don't know if Gio is on, my son, but he's upset, Paul, because he was a huge CVS fan months ago, and boy, has that done well. CVS is doing really great, and he has regret not jumping on CVS. You see that? Look at that.
Are you saying CBS or CVS?
CVS.
Yeah, it's done well.
Your thoughts on iRobot? You're pulling that up.
Look at this one. Look at iRobot today. So I have options on iRobot. I have puts sold on iRobot at $40 a share and $50 a share. This was mind effing me because yesterday the stock was up 50% and my options on a put should be well profitable at that point and they were losing value. I don't care though. I was like, okay, it's a short-term blip. I'm fine with that. So anyhow, what are some questions we can answer there, Seth?
Great. Can you guys please make a video on calls and puts options? We'd love to know. Mattia, we have done live streams on them and we have done some videos, but that's right, Paul. I would say we need to do that more. We need to do more of calls and put options because they are incredibly interesting. My son is here. Gio, I love you. Are puts on investment firms a smart play right now due to the money they're losing? Or am I looking at this wrong? Love the show. Dustin, we love you. Thanks so much. That's a great question by Dustin.
Okay, so I look at puts. I don't care what the asset is. A put is an instrument that you're going to use to get shares of a company at a lower price. I don't care what the company is. If the company is selling for $50, let's go over here, $50 right now, and you want to buy it at 30, and I'm being extreme here. I don't know what the exact numbers are. Just don't hold me to it except for the fact it's an example. I would sell a put, let's say for June 18th, I don't know if that's the right date, at $30 a share. Somebody might pay me $1 and say, Paul, I will pay you $1 that you get to keep no matter what. If the stock is at or below 30 on June 18th, you have to give it to me for 30 bucks. If it's above that, you keep the $1. If it's below that, you give me the shares, you still keep the $1. That's all a put is. It's forcing me to buy a stock at a certain price.
They put it in your hands.
They put it in my hands, and it's currently here. I get to collect cash while I wait for it to go down. That's all a put is. All I care about is what's your asset. I don't care if it's a financial firm. I don't care with Bitcoin. I don't care what it is. You are using this as an instrument to get an asset at a lower price. That's the way I use puts. I don't buy them. I sell them.
My son is cordially inviting Paul and Mo for sled riding and El Pastor tacos this evening if you want to come.
I will not be going sled riding.
Dom says, let's book an Everything Money cruise in 2022. Dom, you're absolutely right, and I assure you, years down the road, we will absolutely have an OG Patreon conference or gathering in Mexico in the mansions where we come together and you guys learn more, have really sort of like, what do you call it, Paul? Like a 3-day sort of event where we all fly down there and learn from Paul and Mo, and it will be incredible. It's going to happen. What books do you recommend to read, Juan's asking?
Okay, Stephen wants to know
Go ahead,
the
sorry.
risk on the puts. Great question, Stephen. So what's the risk on the puts?
And also why you prefer puts over covered calls.
It's not.
They're totally different
not
things.
Sorry about that.
Yeah, it's not an either or.
You're good.
Here's the risk in the puts, and I don't perceive it to be a risk. That same example. I'm sitting here saying, when it hits 30, I'm buying it anyhow. The risk is on the day of June 18th, it's at 20. I still have to buy it for 30 from them. I still have to take it for 30. I lose $10. But in my head, I didn't lose money. Why? Because I was going to buy it at 30 anyhow. Let's say it hit 30 on May 15th. I would have bought it anyhow. And then it went to 20.
Because you liked the company at
Right.
30.
So I don't consider that to be a risk. Other people would sit there and say it's a risk. I do not. Here's the actual risk. Between now and June 18th, something happens in the company that makes me go, oh crap, I don't want it at 30 anymore. I want it at 15. And I've already sold this option for $1. That's the risk. The risk is my story has changed and I regret selling it for 30 on an option. So we tend to write shorter term puts. I try to go month to month to month, generate my income, because in a month period of time, it's hard for things to really change fundamentally. That's the real risk I perceive in selling puts if you understand value and fundamentals. If you're just doing this as a way to get prices lower, then you're just throwing darts. But the real risk to me is not that it goes below 30, is that the story changes but I don't think it's worth 30 anymore. That's the risk.
TM simply asks, I'm new to the channel. How do you guys help newbies get in the market? This is a great, very basic question. In general, with all of this, folks, Paul's teaching is that you should probably put, if not all, close to 95% of your money in standard ETFs that will give you a very disciplined return over the next many, many years so you can sleep well at night, not worrying about these highs and lows. So ETFs are the way to go, Paul, right? That's your general. Everything we really talk about.
Low-cost index funds or ETFs.
And you can do this yourself with an app like Fidelity or Charles Schwab. I think there's a link below for Schwab if you want to open up an app and you get money. We don't. You get money. And in just general, we've done some episodes on ETFs, but those are the safe plays that can make you a multimillionaire down the road. And all that we really talk about is that fun 5% that you might take a chance with, or in our case, a very educated chance on by going through the 8-pillar analysis and looking at some undervalued companies and buying those as opposed to overhyped, expensive companies. So that's really my answer, Paul. How was that answer?
I think it was a great answer.
Good.
I would say good boy.
Great. And Billy is right. Vanguard offers some low.
Vanguard's great.
Yep, Vanguard.
Vanguard's great. I trust Vanguard very much. You know why? The guy who started Vanguard, I have his book signed. Boyle, was it? I don't remember. Matt Jensen knows. He was worth like $30 million when he died. His comment was, I don't need more. I don't need to become a billionaire. I'm fine with this. And Vanguard's a huge company. He could have easily become a billionaire just by charging more fees, and he didn't. He believed in helping investors and said, I have plenty of money. This is something I didn't believe in years ago, and now I do. I still like making money. He still liked making money, but it's all about doing what he thought was right. This is the argument we have internally about the Everything Money YouTube channel, but I think over time, people have started to get that we're trying to do this the right way. You don't see sponsorships here. We've already been reached out to for sponsorships. We're not doing that unless we really believe in it and we use it ourselves. In fact, the only sponsorships we want to do are our own internal companies and or companies that we use that I go to them and say, guys, I use your stuff. Do you want me to talk about it? If the answer is yes, great, pay me. The answer is no, I just won't talk about it. That's it. That's what I want to do. So if you ever see me endorsing, I'm going to tell you exactly why I'm endorsing it and tell you the timeline because I want to be fully transparent on that.
Mattia is asking, do you think buying ETFs right now is a smart move considering all-time highs? I can try and answer that in that you want a dollar cost average yourself. So
your job is not to time the market, it's to be in the market. Mm-hmm. That's it.
The quicker you can get your money in, it will be going in this trajectory if you're looking at home, and then every day Mr. Market will decide if it's high or low. But in general, yes, get your money into those ETFs, it doesn't matter.
What you care about is 30 years down the road. What's so funny?
What's up, Mo?
Matt Jensen just said everything money brought to you by Robinhood.
Oh yeah, yeah.
Exactly. You're not here to time the market. If you have a long-term outlook, 20 plus years, look at 20 years ago. We had one of the most some metrics say more expensive than today, and the market still made 6% a year since then. So your job is to keep buying as markets fall and go up. You'll never be able to time it. I can afford to try to time the market because I have other revenue streams. I have other income. I don't need to make money off the market. I'm okay being patient.
Paul, update on the website. People want merch. We need to get to that.
April 15th, the website will be officially available. I'm hoping sooner, but April 15th is the number. The website's looking great. February 1st is my first beta test of the website. We need to still build out the login. Everybody on Patreon will have their own login, create a password, etc. Merch. We have internal discussions about merch. One, I want merch. I thought about like a Dow 50,000 hat.
I want all 3 sectors on there.
Yeah, so we should do something like that.
I want all 3.
We want to create merch, but I want to create merch when we have a really big following, 50, 100,000 people. That way that I can buy the merch and sell it quickly. We're going to have limited supply of merch for everything, but we do like the idea of merch. Mason keeps harassing about it. Mo keeps harassing me about it. I mean, look at what he's wearing now. I just bought, I bought the Portnoy Musk 2024 hat.
Yeah.
No, I didn't buy it. You bought it.
I bought it.
Max Equity is saying that all merch should only be available in Paul's Schmedium, which is correct. The Schmedium shorts and the Schmedium shirts. And we do want those Everything Money shorts. That would be hilarious with our face on, our cartoon faces.
You know
on
what we
Paul.
need?
Go on.
We need Lauren, our designer, to take our Everything Money and make it into a nice just EM. What do you think, Don? Like just an EM.
As long as it stays in the brand, it's fine.
Yeah, I mean, I want it to be there. So I'm trying to figure out, because Everything Money is too long to write. I don't want it to be too big. But if it was like nice EM on a hat or something like that, just have EM right there. That's what we want.
Yeah, we are working toward this, and I will be jumping on the Patreon to get your ideas on funny merch. We definitely want to bring a lot of comedy to the show, which we think is one of the things that we do well, as opposed to maybe a dry topic that other people might be delivering. We love this back and forth. And EM equals Elon Musk. That's a great idea. Extra slim. Oh my God, you guys are hilarious.
Yeah, we're gonna do merch though. It's gonna be fun. What Seth just said is really important. I don't take anything too seriously. I think people, when they meet me, Mason's mom, when I first went out with her and dated her extensively,
yes.
She thought she was surprised how funny I was, and she was expecting to meet somebody super serious and rigid, and I walk in saying, "What's up, mother?" Whatever. I was like, making jokes, hanging with their kids. So I'm very big on making this fun. We're gonna have bits, we're gonna have shows. It's just all about building this whole channel.
Paul has been hesitant to show off a bit of his life. He never wants to be a braggart of sort, but it is somewhat impressive and interesting to normal people, Paul. So for the patrons, we will be walking through the new home, which you're going to freak out. We will be doing a Paul's Watch, an inside
for
Paul's...
patrons.
For patrons only, a Paul's Watch
Because if these guys are willing to pay
channel.
me, then I'm willing to show them the watch collection.
The absurd watch collection. It's in safes and they're spinning. You guys got to see this ridiculousn's. So,
Somebody asked me if this was a Cartier. It's a Panerai. It's not a Cartier.
It's a cardigan, you mean? Thanks for noticing. Okay.
Speaking of which, that's a funny story.
Go on.
We were at a restaurant on Thursday, you and I and Bethy, and we said something about Dumb and Dumber, and the waitress wrote a note, and I thought she was giving me her number, and I was very awkward about it, and I looked at it and said, "It's a pullover. Thanks for noticing." And we all got a good chuckle about that.
Llewellyn, did we connect on LinkedIn? We should.
Yeah, he looked at my profile. Llewellyn looks at my profile every 3 days.
I don't have any guns. Paul, you don't have any guns either.
I don't like guns.
I don't like guns at all either.
It is a constitutional right.
Me neither.
And if you want to fight the Constitution, we can fight every other aspect of the Constitution. I do not like guns. They make me scared. But in my new house, I have extensive security system. I will have bats, not like flying bats, like actual bats.
A bat.
I have bats next to my bed right now.
You're gonna go to.
Oh, bring it, baby.
You're gonna go to war with a Louisville Slugger.
I have cameras. I already met the camera guy yesterday. I'm like, I want a camera down this hall. This hall, he's just like.
Well, how am I supposed to run through your house naked when you're away?
That's the point of it. I want the cameras
everywhere.
to see you.
We will be doing live streams for our patrons only from Paul's new mansion, and oddly enough,
Paul's bringing a bat to a gunfight.
Yeah, a bat to a gunfight.
Yes,
that's right.
correct.
Paul. Yeah. This
Mason.
is funny.
You got it?
Oh, no, TM. Oh, look at this. Oh, no.
Mason
oh, no.
said, I will release Paul's address at 15,000 subs.
That's a great idea, Mason. That'd be great.
And we just got a $100 sub, and we just got 3 more other basic subs.
Awesome.
Thank you very much, everybody who just signed up.
Now-
$100 sub. Everybody in that chat sticks around. They think it's the best thing ever. It's the most active one, too, by far.
Hunter, I see you there. TM, I love you. You're new to the channel, and let me address this because I was loving you until this comment. What are the top 5 best channels on YouTube that you suggest where there are heaps of 2x, 10x channels? That's definitely not us. Paul, you wanted to address this. If you're into 10x, 20x, 30x, 100x stocks,
We're not the people for you.
we're not a good fit for you. Why is that, Paul?
Because we don't believe, 1, that they happen as often. 2, you should be listening to anybody on YouTube about that. It's completely dumb luck. It has nothing to do with anything. It's not fun. I believe in fundamentals. I believe in momentum trading. I believe in what Mo does in the charts. Even though I've tried chart trading, I didn't like it. But the things that speak to me are momentum trading. I believe in systems and I believe in process. That's what I believe in. 2x, 10x, 20x, there's no process there. It's just hope and dreams and buying a lottery ticket. I don't believe in it.
Yeah. Great. All right, guys. Mo, anything to add? What do you think?
No. If you guys want to learn chart trading, join that $25 level or join the $100 level, and you can access it anytime you want to. We're there all the time. We got a couple of guys that drop down and talk about. It's kind of cool. We'll go from the Mo's Muscle chat to the Paul Shorts chat, and we're just going back and forth. It's pretty neat.
FYI, for the data out there, 1, the Paul Super Shorts channel, the $100 channel, is over double the number of messages as all the other channels. 2, Trader Mo is the most active person in our Patreon. Did you know that?
I
didn't
see.
You didn't know that either?
No,
He is the most active person on our Patreon.
Cool.
And that's why we brought Trader Mo in. Part of the reason I brought him in was he's so active on it, I want him to get paid for it, so he's getting a piece of his channel, so please support him.
Garoy's asking, I'd love to understand the financials of having a YouTube channel. Just throw hundreds of thousands of dollars at it over the course of years with no subscribers.
I make no money until month 23.
Then when you start making money, give away 2 Teslas.
I think
And I
Paul's
just did
doing
a budget.
business weird.
And I just did a budget the other day. I did a budget 2 days ago on this channel, and I tripled it basically. I tripled what we're spending right now. I was just like, okay, this is gonna work, so I need to triple this. Guys, I'm in this for the long haul. I'm here to make Don and Seth more money, and I don't care. I mean, I literally talked to him yesterday. Seth's like, oh, we can buy these cameras cheap now. I go, well, why? He's like, a new camera's coming out. I'm like, well, how much is the new camera?
Yes.
Like literally, he goes, Paul, we don't need the new camera. I was like, well, you said we'd have, it's a smaller camera running out of space. So I want to sit there and say that to you guys as saying, guys, I want to make money just like everybody else. But if I have to sacrifice money today to have a better channel, I'm going to. I don't care.
Benjamin said, then give away all the money you make. Benjamin, that's precisely what Paul's doing this year with giving away 2 Teslas. I assure you we will not have that much in revenue. And so, we are giving away 2 Teslas to 2 of our patrons. And so the longer you're in, the more votes you have in terms of getting it. So our OG followers, and you know who you are, and we love you, you'll have the best shot at driving one of these away. And if you're in the States, Paul, we've discussed trying to get our patron who does win, get them here in for a show. Go get the Tesla together. Go pick it out together. The interior will drive my Tesla up, and it's going to be an exciting year and journey for us.
Give away your money. Yeah, that's right. That's what I just did.
Yeah. So, all right, guys.
I think we're set.
What do you think? We're set?
2:31.
Okay,
Let's
guys.
go.
Have a wonderful weekend. Good luck on that GME, AMC if you're holding those. If not, stick with us for the companies you've never heard of, like the Biogens of the world that are slaying. And I'll see you all on Patreon. We're doing our February live session just for you on the Patreon, so get ready for that. And we will see you next Tuesday at 1 o'clock. Love you guys. See you around.
See you guys.